What is this? Okay, we are live on Facebook, LinkedIn, and YouTube. Oh, X had an error and now it's on. Okay. Welcome, everybody, to the Alternative Investing Club show. This is the show where we interview people that are involved in private investments, including commercial real estate, oil and gas, different types of funds. Welcome here. And in particular, welcome to all those of you who are in our community. If you want to join our community, please go to alternativeinvestingclub.com. We meet every single Friday at noon Pacific time with a different speaker that will help you level up your investing game and give you insight into people that are investing across the United States. Today we have with us Mark Russel from Fromley. Mark, welcome to the group here.
Great. Thanks so much, Daniel. Happy to be here.
Yeah. So Fromley is fairly new to me, and this is one of our investor introduction talks where we'll spend about 20 to 30 minutes just getting to know you. We'll send it to all the people in our club. And so why don't we lead off with just a quick, like 1 to 2 minute on how you got to be what your background is, and then we'll go into Fromley.
Yeah. So I have a diversified real estate background. We're historically a land developer. We have developed across all asset classes, multifamily, industrial, office, retail, and single family housing. We have predominantly focused in Idaho and Georgia. And I'm originally from the Southeast. My wife is from Georgia. And my wife, by the way, actually started our company. So she's the founder, and I followed her into it. And we have in the last 6 or 7 years, 8 years or so, I'd say the majority, 60 to 70% of our work has been single family attached housing in Idaho, meaning townhomes and condos. And so Idaho is a very fast growing state. It's, a small state, but it's a lot of high growth. And it's been the fastest growing state per capita was 6 years in a row from 2017 to 2023. So there's a lot of opportunity here. And so that's what we focused down on, but we still continue to develop across asset classes. We have an industrial project going up right now. And we have 3 residential projects in the pipeline. At shovel ready stage, I would say.
Okay. All right. So a couple of interesting things here. First of all, Idaho and Georgia together. Yeah. That's an interesting combination. Are you based out of Idaho, I assume?
Yes. I live in Boise, Idaho. I moved here in 2007. But we've kept we kept our relationships in the Southeast, which is where we're from. And we still have a lot of multifamily holdings and projects in that part of the world. So that's kind of the
good. Good. That's been a good area to invest in over the last couple of years. At least coming up through the 20s. I guess the last year or so, multifamily everywhere has been a little difficult and a little rough.
Right.
But yeah, tell me. So I want to hear, I guess, about your bread and butter. First of all, I think Idaho is a great place. Last couple of years, I know it's definitely been booming. It's been affected by people leaving California and to some extent Washington and Oregon as well. I'm actually based out of Portland, Oregon. Right. So I know people who have gone, in my case, mainly down to Arizona or Texas. Mm-hmm. But I know Idaho has been a beneficiary, as well as Nevada has been a beneficiary of that migration. And Boise has been one of the largest growing metro areas in 2021, 2022. And 2023, I know. I haven't kept as much on to the statistics with it in 24 and 25. What's happening there? Are we seeing Boise, coming up, and is it tending to level out? Is it pulling back a little bit, or is it continuing to accelerate in terms of rent growth?
Yeah, I think, well, in terms of, so we look at sales and rent because that's our model as we do for sale as well as for rent. And I think that on the sales side, we definitely continue to see prices go up. And it's driven just by a complete lack of inventory, a lack of new construction. On the rents, we have seen some plateauing. Um, and, that's, I would say, predominantly because we had such a rapid escalation in the pandemic era, as you mentioned.
Yep. Yep.
So it has plateaued. Um, my sort of expectation on the rent side was be that we have a couple of years of plateauing and then we start to have it go back up again, because we just don't have enough product coming online.
Right.
And so we still have the inward migration that's greatly outpacing everything else. So the housing trajectory is more or less remaining the same, while there's some macro issues that have influenced it. But that is most, I think, market wise, most observed on the for rent side rather than the for sale side.
Okay. So, in terms of your main business, then tell me a little bit about what Fromley does and how do you bring your houses to market? Are you well, we'll dive into that a little bit.
Yeah. So, what we have done, so I would say in about 2017, 2018, we really started to see price escalation compared to what Idaho has had. It's not Portland level and it's not California level of pricing, but we started to see it kind of go up. So we really started to develop neighborhoods that would be designed as build for rent. But what we have continued to see throughout that whole time period, even to now, which is that the end buyer is much more willing to pay a higher price to purchase than they are to pay to rent. So all of our neighborhoods have continued to go as a for sale model and continue to be sold. And so what we have done in the past, we've kind of done multiple ways of bringing these to fruition. Historically, I was predominantly developing land for builders and would sell the land to the builders. Then we kind of shifted into a joint venture partnership role. And now we've ventured into where we manage the entire process all the way through the vertical. And we do have our own internal sales team that sells to home buyers. So we're fully equipped and ready with, moving our projects, our homes to home buyers.
Do you tend to sell mainly to people that are looking to have a primary residence there, or do you sell a lot to investors?
You know, um, Definitely predominantly people who are residents.
Okay.
It's definitely there's always a investor contingency, if you will, who is always wanting to get in, and in part because when what we do is sort of central uh, area townhomes, which are in desirable locations,
Mhm.
and density is kind of needed to for market demand, which is why we do the attached townhomes. Those make in general great rentals, particularly if you have a longer term horizon. So like if you're looking at it, but in terms of investors, is typically people who are buying one, two, three, maybe four, and not larger investors who are trying to buy, the entire neighborhood, so to speak. Um,
Yep.
but so the vast majority of our buyers, because of the product and the price range, are, you know, first time home buyers, young couples, one, two kids, divorced people with one child, two kids, or empty nesters. So we're kind of getting people at the two sides of the buying horizon, the
Gotcha.
people trying to enter and the people trying to downsize.
Yeah, yeah, that makes a lot of sense.
Yeah.
I'm hope I'm here in Portland. We're in a 5 bedroom house, and when
Yeah.
my kids are in their teenage years now, and so we may be looking at that in the not too distant future.
Yep.
Um, so are you developing? You've mentioned detached townhomes, and you've mentioned developing neighborhoods. What's your breakdown in terms of where you invest? Are you buying entire neighborhoods and bringing them through the entitling? You also mentioned bringing through the entitling process. So I see at least three different areas or strategies that you're using here. Can you kind of walk me through what's currently working well and what are you focusing on, and kind of how does that breakdown work for you?
Yeah, so we are, as a developer, we do work on sort of longer term horizons, in that we typically are scouting for vacant land.
Hmm.
We get it, take it through the entitlement and approval process, and get it prepared and approved and ready to build, and just go through the whole process. Um, we haven't to date, uh, purchased approved land from others. We've always taken it through the process ourselves. And in large part, that's because we feel confident that we know what the end buyer wants, so we can make sure it's designed correctly,
Right.
or the way we want to sell it, I guess you could say. And so, yeah, so all of these projects we've taken through the city councils and all of that whole entire process.
How long does that take you in Idaho? I guess Idaho is known for being a lower amount of red tape.
Yeah, I mean, I think, compared to some of our neighbors, it is. I mean, to really go from vacant land to where you can actually start building, you go through a couple of phases for approvals. You're realistically in the 2 to 3 range pretty consistently. I mean, it's like
2 to 3 years.
2 to 3 years, and that's
Yeah.
what all the projects we have. They're all at that time frame. We did have, I would say, things went a little bit slower during the pandemic era because of shutdowns and staffing reductions, and so we're kind of pushing against the 3-year time frame.
Okay.
Whereas typically we'd probably be closer to 2. But I mean,
What
yeah,
what's that done to inventory? I know there's an inventory shortage, but if you
yeah.
have a backlog like that, are you seeing? Was there a minor surge that came through right after the pandemic opened up, and is that going, or is it abating?
Yeah, no, I mean, we really, there's multiple factors that are constraining inventory in Idaho,
Okay.
which is difficult for, the buyer. It's great for the developer.
Sure.
The developer, I guess the developer can get everything through and approved and ready to go. So, the one thing is that while we had an acceleration, I'd say, of applications during the kind of COVID era, they didn't have the ability to do those. So that's what kind of led to things, instead of taking 2 years, they now take 3. And so we didn't have, and that didn't produce an increase in inventory. It actually created a slowdown. So it was the opposite.
Gotcha.
Which is, on one hand, as a developer, it's frustrating, but on the other hand, it's maybe good because we don't have massive amount of inventory.
Right.
To the
Yeah.
market.
There's definitely an imbalance nationwide, on inventory versus the demand that's out there in the market right now. Even though I think demand is slowing down to some extent, there's still a wide gap between the two.
Absolutely. Yeah.
Yeah, I think, and my numbers are probably a month and a half old or so, but there were around 400 to 500,000 homes nationwide, and kind of a typical market is 1.5 to 1.6, so a million.
Right.
So we're seeing, there's going to be pressure on asset prices increasing, at least in the long term, until that imbalance is corrected.
Yep. Absolutely. 100% agree. And that's what we've seen in Idaho is with the interest rate hikes, we had some slowdown in the acceleration of the home prices, but zero slowdown in the cost to purchase, assuming you're a financed buyer. So, if you're a cash buyer, it's a little bit helpful, but if you're buying with a mortgage, the cost to purchase has just continued to go the same direction. So that's exactly the pressure on the asset prices, because there's just no inventory.
Okay.
Yeah.
Now, what are all of your projects now buying in, land, usually entire subdivisions, and then, building the subdivision, or you mentioned detached homes? Are those one-off projects? How do they work?
Yeah. So it depends a little bit on, where our project is. So basically what we typically do is just get a vacant piece of land and ensure that we're be able to develop on it and then design it around the product that is most needed.
Hmm.
And one of the differentiators that we have done for us is really focus on things that are as close to Boise proper as we can get. So in the scheme of Idaho, the farther west you go, we have more and more land that enables you to get kind of like your more standard neighborhood with larger lots and things like that. But that really has people a long way away. Um,
Hmm.
so it's kind of a trade-off. People can decide if they want to drive a long way and kind of live farther out with a larger yard, or do they want to live in closer. And then when we are in closer, sometimes the cities and the municipalities want us to have some detached product. So we have a mix. And that's because they're trying, which I mean, I think is great, is they're trying to avoid this sort of, lack of a better way of saying it, sort of communist one appearance look to some developments where you put in um, townhomes and they have
Cookie
the,
cutters.
yeah, they have the cookie cutter. They look like maybe like apartments instead of
Yeah.
homes. And so we're very much focused on creating a home feel. So we do intersperse detached homes along with the attached homes in some of the neighborhoods.
Okay, that's good. I know that. Would you call those assisted dwelling units, or are those different?
Yeah. So the ADUs would typically be a second unit on a single home. So if
Okay.
you had a yard and Boise is very bullish on this, but some of the
Mhm.
requirements restrict it being done as much as you would like. But someone can go in and put a second unit on their property.
Mhm.
And that can be, for example, you could do it a unit over your garage and have it as a second dwelling unit as opposed to an extension of your house, which would typically mean you could have kitchen and things like that. So, but
Right.
that we haven't really worked much in that space, and we've done it a little bit
Okay.
on things, but that's not part of the development framework
Okay.
strategy we're using.
Tell me how, shifting the conversation a little bit here, how do you tend to work with investors? Have you financed most of these projects yourself historically? Are you beginning to work with investors? What's your strategy there?
Yes, we definitely need investors to meet the market need because there's too much opportunity and it's very capital intensive. We have for years sort of done self funding and investors with people that know us and we're close with. In 2023, we ended up having went out and did a couple of raises for two projects through Wealth Advising or registered investment advisor,
Hmm.
um, and raised about somewhere around $10 million for those two projects. So we're definitely now firmly in we're working on developing uh, investors because we have the projects and we just need the capital. So
Okay.
that's why I'm
What's
glad to talk to you.
what do the numbers look like on a typical project that an investor would come into?
In terms of the returns and things like that.
Yeah, well, what's the cost of bringing the land through the entitlement? What's the construction
Mm,
cost? What's the timeline? Uh, you can give projected returns if you want, but you don't have to. We usually, ballparking is not a bad thing, saying that it's projected.
yeah.
Um, don't give exact figures.
So so that's a good question, and it's very, I would say, very very project uh, dependent or contingent because, for example, right now we have a 12 home neighborhood, a
Hmm.
60 home neighborhood, and a 136 home neighborhood.
Those are
Uh,
three very different profiles.
yeah, so three different profiles, and that's what we intentionally are remaining diversified in our project portfolio.
Hmm.
One, to give opportunities to people. So if for the 12 home, that would make sense for someone who wanted to come in, sort of test it and could get out relatively soon. Um, So that kind of project, the 12 home, would require essentially like $2 million in equity. We'd have about a $6 or $7 million loan. Overall profit would be around the 3 million. And it would probably be about an 18-month turn.
Okay.
So those are kind of the broad numbers. And that's 18-month because that one in particular is, already approved and permit approved.
Would you structure that as a joint venture or something else?
Well, we would structure it as with investors coming in as limited partners into a fund, and then that fund would own the property in question.
Gotcha.
Yeah.
What sort of terms do you usually give on your funds?
So what we've been doing, which is we like it because it's nice and clean and simple, and it's, we believe, mutually beneficial, which is we give an 8% preferred return to the investor, and then it's an 80-20 split thereafter.
2 and 20.
Yeah.
Very nice. Yeah. Industry standard. It's people know it well.
Yeah.
And it's a good model.
Yeah. And that's why I think, when you start tugging things one way or the other, it's hard to keep everyone on the same page.
Yeah, I agree. We see a lot of interesting, people that do interesting business models can be successful, but it certainly takes a lot of marketing effort, and it's just more work. Staying with 2 and 20 is something that I think a lot of people know. We get a lot of speakers in our club that do that sort of model, particularly in multifamily.
Mm-hmm.
And actually, that's for a construction project. I would see 2 and 20 a lot for rehab projects, or multifamily that you might own for like a 5-year hold. Those, for a construction project, those are pretty good terms. Do you give cash flow along the way at all, or as a construction project, I assume you probably don't?
Yeah, it's not the same. I mean, we definitely, as soon as things start selling, we start returning capital. But I would say that the period is typically not a long drawn out period like you would have on some multifamily, where you want to renovate and then you start making distributions, and then you have a planned sell or recapitalization at the end to kind of return all the capital plus the return to the investors. But so, for example, if we had on our 60 unit, probably in year 2 there'd start to be some return of capital, and year 3 would finish out.
Gotcha. Is your plan always to sell the homes whenever possible, or do you ever hold any of them and rent them out?
Yeah, right now the current plan is to sell because of the metrics where the home buyers pay more, and so basically you just get a better return. And even if you were to stabilize it and hold it for 5 years and all that, the projections are just way better. And particularly, I think, as you mentioned earlier, we're the multifamily market's a little bit disjointed right now with the high interest rates, and so we just feel like it's a much more secure model now. But we view ourselves as very flexible, in the sense of, like, that's why we design these the way we do, so they could go into either camp. So, if the selling's not there, then we rent them. If the rent, or vice versa. But my outlook is, especially in Idaho, it's a little different in Georgia, but in Idaho, selling's going to be the best path for a while.
Okay. And are all your investors coming in as limited partners? Do you do JVs with any groups, or is it all fund limited partner?
Well, I would say, again, back to the point, like, we view ourselves as flexible. So we and it would take a whole nother 2 hours to describe all the creative financing things that we've undertaken to get things done. And so we're very flexible, and we have done JVs before. So we would definitely, always look at that, put it on the table, and see what makes sense for everybody.
Okay. Do you accept 1031 exchange money?
Yeah, that does take a little bit of more work and coordination, but we have done it multiple times and can do it.
hmm I've seen a lot of operators out there that don't. They'll only accept 1031 exchange money if there's a certain amount of equity being brought in, like 500K or a million or
Right.
some larger point that makes the extra legal work worth the juice worth the squeeze.
Right. And that's probably the case. But on the other hand, um, we're never too shy to take a quick look and see if something makes sense.
Yeah. Is there anything else I should know about Fromley and what you guys do?
No, I don't think so. I mean, we're here when we're ready to go. So we'd love to partner with the Alternative Investing Club and you guys and see what we could do to get some stuff out of the ground and make it worth
Okay.
their while.
All right. And the question I always ask people at the end of these, and it's kind of a surprise question, so it's off the top of your head. Can you recommend a book to our investing club? It doesn't have to be an investing book, it could be any book, but give a book recommendation.
Um, the book that just pops off the top of my head, and it's because I just read it.
hmm
It's on negotiation, and it's titled "Bargaining for Advantage" by Richard Schell.
Bargaining for Advantage by
Yeah,
Richard
and
Shaw. I have
Richard
not read that.
and Richard Schell is the head of negotiation at the Wharton School at the University of Pennsylvania. And he's been there for like 30-ish years. Um, and that book, what I liked about it is it's actually very simple for a heady, academic-y type of environment. But so he really does a good job of distilling the basics, but backed by
Yeah,
data and research and everything. So
very
that's
nice. I see it's $10.69 on Amazon right now, and
oh,
it
there
looks
you
like
go.
a good book.
Cheap. That's
Yeah,
in
at least
ROI.
where I am,
Great.
it says that I could order it today and have it by 4 p.m. this afternoon.
There you go. Come in with an Amazon drone, probably.
Yeah, yeah. I, I actually, for it's kind of convenient. I live about a mile and a half from an Amazon distribution center.
Oh, perfect.
Um, yeah. So, but anyway, Mark, thank you for being here and sharing with us a little bit about Idaho. I like the area and I like to keep tabs on it. And so, we definitely like to invite you to be a Friday speaker at our club. And so I'll follow up with you on how to do that.
That'd be great. Awesome. Thank you,
All
Daniel.
right. Thank you.
All right. Yep.